traders at Norrenberger believe the profit-taking momentum on the Nigerian equities market will be sustained in the fourth quarter of the year as investors continue to weigh macro and market uncertainties. Abigael Adesina, research and insight analyst at Norrenberger, joins me now for this conversation. Abigail, we're seeing this sustained momentum last all from the dip we saw last week. How long do you think the market can absorb this?
Thank you, Aki. Notably, from this sell-off as begun right from beginning of November, and usually it's typical in the equities market, right, that we see these sell-offs around this November and towards early December thereabout, which is majorly as a result of investors, doing portfolio rebalancing and all of those things. But last week it went on another level, the market losing as high as over 5% in a single day, something that we've not seen in a very long time, right? And that was majorly as a result of, the uncertainty and lack of clarity that was around the capital gains tax, right? Thankfully, a little or some sort of clarity was provided, right? Which by Taiwo Edele, and also some assurance, given by the Honorable Minister also at the closing gong that same day, right, which brought, some grains back into the market at the later days from Wednesday to about Friday last week. But this week we've seen sell-offs, resume again on the Nigerian equity market. So we would expect that that investors still continue to react to all of this uncertainty and somewhat lack of clarity that we still have, even though that is clearing out a bit more. We expect that investors will still continue to react to that as we see sell-offs in all this large cap stock, which has been driving the market down, just for some more days in 2 weeks.
Abigail, we're seeing some macros showing concerns. We're seeing inflation print at 16.05%, and then also we're having the MPC meeting hold next week. And all these signs, do you think that would serve as a recourse in terms of this profit-taking activities in the market?
Yeah, seeing inflation at 16.05%, it's good news. When you relate lower inflation numbers to, and then expectations that the MPC would, reduce interest rate, when you relate all of that together, those are good news for the Nigerian equities market. Naturally, you'd expect that we see the resumptions of some gains in the Nigerian equities market, that more people want to put in their money into equities, as we expect, lower interest rate to lead to, also lower stock rate or lower yields in the fixed income market. So you naturally expect that, as we're always seeing, a reverse of that, right? If once we start to see lower yields in fixed income market, we also see higher or increased buy sentiment in the equities market. So we expect that should also happen, coupled with more or further clarity in terms of this further clarity surrounding the capital gains tax thing as well. Should increase buy sentiment in the market.
The capital gains tax is on one hand there, and then also the government's borrowing plan is on another hand, 1.15 trillion from the domestic markets to support the 2025 budget deficit. Do you think in any way this is also having a say in terms of investors' interest, for fixed income assets at this point in time, knowing that the government would in any way, we've seen the DMO come up with a revised debt calendar so far?
Yes, investors' sentiment or going into the fixed income markets is something that is not arguable. We always see the federal government or DMO, coming in and then borrowing or adjusting their calendar, right? That is a given, right? And we'll see that usually if investors, or when we see these borrowings come up like this, and then we have, and this comes in through, the fixed income market, the borrowings and all of that, would still see that does not, like I said earlier, the natural course of things is that when we have more borrowings or lower yields in the fixed income market, it translates to or transcends to buy interest in the equities market, right? And then we also believe or strongly believe that the rate at which we are seeing now in the equity in the fixed income market, less than 16% stop yield or stop rate, 15% stop rate, and all of within the range of 15 to 16% stop rate is what we'll still see in the medium to short term, So yeah, that is still kind of minimal compared to what you get if you invest in equities market.
Abigail, let me put you on the spot now. As the year comes to an end, what sector are you looking at to weather the shocks in terms of this sell-off?
Yes. Okay, so thank God you mentioned putting me on the spot. However, there's no one size fits all, one size question answer to that question. Now that inflation is coming to an end, we currently have October inflation printed at 16.05, sorry, right? And then we're also expecting that the MPC would come on next Tuesday with reduced interest rate. So all of that are supporting factors that will help certain industries or sectors, such as the industrial sector. So if you look at the industrial sector, that is lower borrowing costs for them, right? When interest rate comes down, that's lower borrowing costs for them. And also inflation, right? Lower inflation would mean consumer goods and industrial goods alike, right? Lower borrowing costs and lower inflation rate will mean, particularly inflation rate, right, will mean increased purchasing power, right, for their consumers and people who typically use or people who patronize them, sorry, right? So that should increase their revenue and also increase their revenue in the mid to long term, right? And also increase investor sentiment, right? Drive investor sentiment towards purchasing stocks in those sector.
Anyway, Abigail, will keep an eye on how the market performs, at least for this week and the rest of the month. Abigael Adesina, Research and Insight Analyst at Norrenberger.